This is the one that just came.
Jasper and Nadia now dread opening the mail, worried it'll be their bank raising rates again.
We've gone from 3.24% in July last year to 5.99% just in the last week.
In 2020, they bought a small townhouse in Sydney and are facing massive increases in payments as they start coming off their fixed rates late this year.
A little bit smaller than we wanted
Despite this,
initially.
they consider themselves lucky.
We've got our kitchen.
When taking out their loan, the Commonwealth Bank encouraged them to borrow far more than they wanted, selling the idea of spending more upfront and using the equity to buy something bigger.
No sane person should be offering $900,000 to a first-home buyer, especially when they're our age and they might be looking to start a family in the future.
Oh, puppy.
They rejected the offer, borrowing $500,000 instead. They say banks should better explain the risks if rates were to rise.
There's an ethical or moral position that they should be taking where they're explaining the full scope of the risk that you might be exposed to over the life of the loan.
The Commonwealth Bank says its assessments ensure customers can meet their obligations, including at higher interest rates.
The bottom line is inflation is still too high, but at Tuesday's meeting, another hike is a live option.
With so many Australians facing mortgage stress and pushed to their financial limits, the ABC is launching an investigation into home loan lending practices, and we'd like to hear from you.
Meanwhile, a Melbourne financial counselling organisation is calling on banks to offer some stressed borrowers a moratorium on rate rises.
Why should it be that the banks will make record profits and people who had checks on their financial viability, where they capacity to repay, why should they suffer the most?
A question at the forefront of many borrowers' minds. Alexandra Blucher, ABC News.